to meet with Josh today to talk about some fixed assets stuff. Pretty excited. I don't know a heck of a lot about it, but I know we have a lot of customers that use it, and from what I understand, it takes them out of Excel and puts them into the system, right? And that's always kind of our goal. So
first, what is a fixed asset, Josh?
An asset is something that your company can use as whether it's something like a building or something that helps your business move forward, whether it's in progress or in construction. Something on your books is an asset that's going to depreciate over time. And the purpose of it is to streamline it, so you don't have to go back and forth between Excel and any other legacy systems that you're working on. It's clear and concise within a grid format in Acumatica, and it just looks a lot cleaner than going through these really complex Excel spreadsheets.
So what are some examples of what people put in like the fixed asset module of Acumatica? Like, what would you see in actual user system?
Well, you can set up templates for specific items. So, for example, you could create a template for like a building or something, where the asset life could be a very long time, 50 years or something like that. And you could also set something up that is got a useful life of like 3 or 4 years, a piece of equipment that is used on your jobs or something like that. If it's a construction job, you can create an asset that is in construction. And then once it's completed, then you convert it to an actual asset outside of construction and move your costs over. So it can be really, really useful, and there's so many wide ranges of uses in the assets. Vehicles that you use on jobs and whatnot. It's the sky's the limit.
So I'm not an accountant by any means, but you've got a value, you just depreciate it, right? Like you're taking value away.
Absolutely.
Do you like just set it on a schedule? How complicated is it to make the asset depreciate?
So the quick answer is that it's incredibly simple within Acumatica, because this stuff is automated based on how you set it up. So as long as you do your due diligence in the beginning, make sure you have all of your account values, your acquisition costs, how long this asset is going to be in use before it's disposed or sold, or however you're going to transfer it over. And you set the conditions on how you want it to depreciate, whether it's a straight line or a declining balance. It really just kind of depends on what you're supposed to set up. And the great part about it is that you can utilize multiple books for the value of the asset, but also for taxes and stuff like that you might want to keep track of. It's really useful. Just in one screen, you can have multiple books for accounting for assets and liabilities, but also your taxes.
So if you don't have this, is it just like a GL transaction that you have to create every month or something like that typically? Or how do people handle it without fixed assets?
Well, there are a couple of different ways. If you have assets that have already been depreciated and transactions have already hit your books, you can do an import while the fixed asset ledger is kind of on hold and it's not going to post to the GL. You can insert whatever you have for depreciation up to that point. And when you activate this asset, it's going to automatically create all of the transactions that will have brought you up to this point. Your acquisition, your purchases, your depreciation, and any other type of transfer or adjustment transactions that you set. Once it's in the system and there's still a depreciable basis, you will calculate depreciation on an automation. So you'll have a specific period that your asset is in, and if you want to depreciate to another period, the period forward, you'll just click a single button and it will automatically create a transaction for depreciation based on the schedule that you have set up. And so as soon as you get it into the system, you only have to do that every single month, or you can run an automation schedule to where it runs these automatically and you don't have to do anything.
Okay, so how, I guess, important and specific is the setup of these fixed assets?
Very specific.
Yeah, is that?
Very specific, because it works perfectly as designed if you set it up correctly. If you need to go back and make modifications to the asset cost, you can always do that, and it'll just create an adjustment transaction. But if you mess up your depreciation and say you overstate it, the system will automatically create balancing transactions for the next month in adjusting the depreciation. And sometimes that can get a little convoluted. And so if you really, really mess it up, sometimes you need to restart it, because that's the best way to ensure that it's going to look exactly like you have or expecting it in your books.
So it's not something that you want to say, yeah, we'll just throw your stuff in. We'll figure it out later, right? It's
No.
it's like no, take it back. Make sure.
It's
make
one
sure.
of those that is not so forgiving to manual intervention.
Okay.
It really does. It really does take what you input and create transactions for it. You really don't have the ability to see how the calculation works from the front end. You basically have to go back and see what your averaging conventions were, how many periods that you have, and you have to manually do the calculation. If you just do it through Acumatica depreciation calculation, it's completely automatic, and it shows you each month what you should be expecting to post in depreciation. Yes, if you don't have that right, you're going to see values that are not what you're expecting.
It would look a little bit more like chaos, right?
Yes, which you're used to from Excel and whatnot. So it's what we're trying to avoid.
Yeah. So and like we always get the feedback of like, oh, Excel's so easy. Well, yeah, duh. But you do have to manually do everything. And what if a formula breaks? And
yes, you're very limited. And
so
the nice part about this as well is you can integrate your purchases. So if you have something that you have purchased and it's in a specific account, it's posted to your PO control, you can convert that into an asset. So you don't have to set it up; it's automatic.
So you buy it, you bring it in, you create an asset from the purchase.
Absolutely, you'll have it posted to your PO control, your FA clearing account, however you have that set up in your preferences, and it's going to give you an option on the convert purchases to asset screen to define exactly what we've been talking about: depreciation, where it's at. The value of the asset if you need to modify it at all, and when it should start.
Gotcha. How's reporting on this stuff?
Getting there.
Some stuff that we've added, I'm sure.
Yeah, it really depends on the complexity of the asset. The nice part about the fixed asset screen is there are so many tabs that have a lot of information that the reporting for that specific asset, you really don't need to go into any other.
It's just on the screen.
It's on the screen. But if you want to see like specific balances overall for all of your assets, we have that. We have things that depreciation pending kind of reporting as well.
Okay.
So so a lot of your FA accountants can know what's coming due and what they need to process.
Okay. Well, that's awesome.
Yeah.
Really appreciate the insight. Like I said, learned a ton. I don't really know fixed assets well, so
It works really well.
thanks for breaking it down for us. All right.
Thank you, Josh.
Hello, listeners. My name is Josh McLaughlin, Solutions Consultant at Strategies Group. I'm here today to discuss a favorite topic of mine in the Acumatica ecosystem, fixed assets. I'll begin the demonstration by highlighting a few prerequisites which are essential for creating assets in Acumatica. Similar to other modules, much of the default settings are configured within the Preferences screen. On the fixed asset preferences, we must define the fixed asset accrual account and sub. These account settings will be the driving force behind asset procurement. This account is kind of like an asset clearing account. It will record expenses and revenues associated with the asset prior to them being realized. And from this account, we'll convert the unrealized amounts into asset creation, addition, or deduction in the asset module. To do this, I'll need to create a transaction that references this FA accrual account. I can do that from directly within the general ledger or from within the AP subledger. I prefer the two to match, so I've elected to create an AP bill for the procurement of this asset. Now I've created an AP bill which has a few line items, and each of these line items is referencing the fixed asset accrual. I'm expecting each one of these line items to be eligible to become new assets on the conversion screen. After I release this transaction, those line items will become eligible. Now that this transaction has been released, let's navigate to the Convert Purchases to Assets screen so we can convert it into a new asset. The account and sub-account have been pulled over from the Fixed Asset Preferences screen. I've filtered this grid to display all line items that have that AP bill reference number. So you can see the 3 line items that we just created. You need to select one of those and add a new line in the bottom portion of the grid. A new asset is going to be created from this, but no new asset ID is necessary because I have auto numbering enabled. We will, however, have to define the asset class. I'm going to select the building asset class, and then I'm going to go navigate to that class itself so I can show you which of these values are going to be defaulted. You'll set things like whether it's depreciable, the useful life of the asset, FA books, and the depreciation method you're going to be using over the course of this life, and then the GL transactions that are going to default for assets affiliated with this class. Now that it's clear which values are going to be brought over, we need to select the department, verify all of the other values are accurate, and process. Once processed, we can navigate back to the fixed asset screen to hopefully review the new asset that has just been created. I'll refresh the screen, and here it is. You'll notice a lot of these values have defaulted in from that asset class, but you can modify them for the time being until transactions for this asset have posted to the general ledger. If you go into the Other Info tab, you'll notice the correlating AP transaction that this asset derives from. It was auto-populated on that conversion. Any transactions that are associated with this asset will be located in the Transactions tab. It's going to use any book that we have affiliated with this asset, but I want to focus on the posting book because this is the one that is going to post to the GL. Now, this transaction exists and this asset exists, but until we release it, isn't actually placed in service. So I need to navigate to this fixed asset transaction. I can navigate to it from this hyperlink, or I can go to the fixed asset transaction screen and locate it there. This is the transaction associated with the purchase of this asset and bringing it into life. Now that this transaction has been released, let's go back to the fixed asset and verify that the grid has been updated with those values. You'll notice that next to this reference number, there's now a general ledger batch, and the released checkbox has been selected. You can click on this batch number to navigate to the journal transaction screen. I will go there manually and review this transaction that is associated with the purchase of this new asset. Now that this asset is active, the next thing for us to do in its life cycle is to depreciate. Depreciation is calculated based off of a number of variables such as the useful life, the depreciation method, acquisition cost, averaging convention, etc. We're going to use a simplistic straight line depreciation method which spreads depreciation evenly across the useful life of the asset. You'll notice in each of the profiles there will be a depreciation tab where a grid displays the useful life on a period basis with nothing calculated currently. To calculate what depreciation should look like, we select these three ellipse dots and calculate depreciation. Once the system loads these values, we take a look in the grid to verify that depreciation is evenly distributed over the useful life of this asset, which it appears to be. The system has provided projected values, but to actually depreciate this asset, we need to navigate to the mass processing screen, Calculate Depreciation. Here you'll notice that there are a bunch of assets which are eligible for depreciation, and they're displayed here on screen. I want to filter for just the asset that we've created, so we can just take a look at it and isolate it. It has a line for each of the books, but I want to focus on the posting book since this is the one going to be posting to the GL. Current period lets us know which period needs to be depreciated first. I only want to look at one for an example as opposed to releasing multiple transactions, so I'll set that period to the current period. Set the action to depreciate and process. Once processed, we can expand this to verify that a transaction has been created for this depreciation. If we navigate back to the asset, the Transactions tab will display that for us. This new line is the depreciation expense for the period. Again, it's not set to auto release, so I've got to go to the fixed asset transaction screen and release it. All the values look accurate, so I release. Now that the first month's depreciation has been released, let's navigate back to the asset and check to see if there are any changes in the value of the asset. We can refresh and notice now that the batch has been created, and balance will be updated in the posting book only because that's the one we selected. Last depreciation period is also updated to the one we just worked on. accumulated depreciation equals the transaction amount. Net value is less that accumulated depreciation. Now let's assume everything else is going well with this asset, but somewhere along the lines, we need to make an adjustment to it. Say we have an addition to the building that we just acquired, and we need to update the asset to reflect that new addition. Now I can convert this into an asset or a component of this existing asset from the Convert Purchases to Assets screen. But there's another way to do it from within this asset itself, and I'd like to display that now. We'll navigate to the Reconciliation tab of the asset. We're going to try and find one of the remaining two lines from the original AP bill that we created at the beginning of this example. I'm going to navigate over to the reference number, and I will filter for that AP bill number, and I'll see the two remaining lines that are here. I see the new addition to the building that I need to add. I select, and I need to make sure that the addition is selected in the reconciliation type. I need to set a date for which the asset addition needs to take place, and process. You notice the line has been removed from the reconciliation tab, and new warnings appear that an unreleased reconciliation transaction exists and we need to take care of it before proceeding. So we navigate to the transaction screen, and we do see that there is a new transaction for the amount of the new addition. We'll just navigate to the fixed asset transaction screen, and we will release it. Now that it's been released, let's navigate back to the fixed asset to check and see if there's any modification to the net book value since the release of this new purchase addition. We'll find this both in the Transactions tab, which displays individual transactions, but most importantly in the Balance tab of the asset. You'll notice that the current cost is now a little bit higher than what the acquisition cost originally was. The net value is still less one period of depreciation, but it also includes that new addition into the net value. You can also reduce asset value in a very similar fashion. The final big stage of the asset is how we get rid of or dispose of the asset. Disposal could mean many things to a company, but in this case, we're just going to be selling the land because we're moving physical locations to another branch. In this case, we're selling shortly after the asset was acquired. Call it buyer's remorse, if you will. Now I need to sell it. Up here in the actions, you'll notice that there is a dispose processing action. I need to define the date, the proceed account, and I need to define the disposal method. We are going to be selling this one, so I'm going to select the sold disposal method. And I have my proceeds account, the date is accurate, and I click OK. Now the asset has been disposed, but we need to release the FA transactions associated with that disposal. So we navigate to the fixed asset transaction screen. Again, you can go there from the hyperlink here, but we need to release this disposal transaction so it reverses anything in the FA book. Once released, navigate back to the asset, click refresh. You should notice a status change in the asset from active to disposed. As you can see, this is dispose of the asset and you can no longer edit any of these values. Perhaps you've made a mistake and you need to revert those changes. This is not set in stone. There is one final action for you to use. It is the reverse disposal. And this effectively is reversing any changes that you've made as if they never existed. Similar to the disposal itself, we need to release the reversal of that disposal in the fixed asset transaction screen. Now that this has been released, we can navigate back to the fixed asset and hopefully it's been brought back into action. I'll refresh the screen and see if those changes have been applied. The asset is back in active status. And I now have the ability to continue the depreciable life cycle of this asset or to redispose under the proper parameters. As you can see from this accelerated demo of the asset's lifecycle, Acumatica provides a seamless integration with other modules, flexibility, and simple automated processes to optimize your asset management for accuracy, compliance, and efficiency. Thank you for your time.